The stock market had another killer year in 2024. The S&P 500 was up well over 20% for the second consecutive year, and for the 7th year since 2009. Every investor looks like a genius over the last 16 years. In fact, we've only seen 2 years of negative returns during that time frame. I won't be making market predictions for 2025, and I certainly cannot tell you how to get rich overnight. But I have been able to build steady wealth by consistently outperforming the market for over a decade now. I'm genuinely fired up for 2025. Investing is more fun than it's ever been with this YouTube channel and this wonderful community. In this video, we'll cover an overview of the current market, a recap of the past 18 months. There's been some major life changes for me, my strategy that I've used to accumulate wealth in the past, and that I think is still applicable today, and my investing plan for 2025 and beyond. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Feel free to pummel that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. We had one new channel member last week. A huge shout out to the one and only Rosa. I appreciate you joining the channel membership and supporting this channel. You, and all of you that have been here all along, make this possible. You know what time it is. Let's grow. Mr. Market gone wild. The stock market has been on a massive bull run for nearly 100 years. And technically it's been doing its thing for well over a century. But we started getting reliable data in 1926 with the inception of the S&P 500. The market is up about 10% per year during that period. This makes compounding wealth over multiple decades a predictable process. But any smart investor will tell you that they have no idea what will happen over the next year from now. If you're thinking, well, the market should go up by about 10%, you probably missed the mark. Let's quickly review the last 99 years of the S&P 500. I've pulled up the S&P 500 total returns by year, and you can see here we're going all the way from 1926 to 2024. And oh wow, we ended up above 25%. I was wondering if that would happen. So that makes 4 of the last 6 years being above 25% returns. Geez, no wonder everyone and their mom's becoming a millionaire. But I wanted to provide some perspective here though. So if you were to say, well, it should go up 10%, right? Because that is the average, the overall average. Remember, downs hurt more than ups help. You know, imagine yourself having $100. If you lose 50%, you have $50. Now you have to gain 100% to get back to $100. So remember that logic within the compound. You see a lot of ups and a lot of well over 10% ups. But as we scan across, you know, here's one around 10%. There's one there and there. But as you can see, it's few and far between. The 10% line's what I'm hovering over here. There's one that's almost spot on. 1993, boom. But the bottom line is you're all over the map. You're way up for spurts like this. And then you're down. Here's the .com crash right here. The bank crisis right here in 08. You have multiple things. You know, you have the huge depression back here. It ebbs and flows up and down. But here's the point though. When trying to predict the market, so we're here. We had a pretty big correction in 2022. It's a little underrated historically. You know, it's not the worst ever, but it was a pretty bad one when you zoom out. But then we've been up about 25% 2 years in a row. So if you were to say, well, Jeff, what's 2025 gonna do? A lot of people would say, well, the market's really high. And that's true. The valuations, the PE ratios and things like that are pretty historically high right now. You might conclude that the market goes down 15% next year. Sell now and, you know, prepare for the storm. But then if you look, we've had 2 up years. This right here is 3 big up years. Here's 5. Here's, can't even count them. And then you have big up chunks like here when you were doing this, late 40s, early 50s. But we're talking 4 huge bars and then a down. 6 big bars and then a slight down. So really almost 8 in a row, and then you get some of this. And then every once in a while, it just really gives you a gut punch. But are we gonna have 3 up years? Are we gonna have 8 up years before the next red? I don't know. Right here would say yes, if we're looking from 1982, which was after some hard times, all the way right before the .com crash, we would say, well, yeah, it just goes up. So
Just buy, buy, buy. Don't ever sell and prepare for something like this. We've only had 2 in a row. It's going to go to the moon. Who knows? I have no idea if this bar is going to be down here, if it's going to be up here, if we're finally going to hit that 10% mark. I'll tell you a secret. It's not just me that doesn't know. Warren Buffett commonly says he doesn't know. He's a pretty good investor from what I hear. Anybody that truly understands investing at any significant level will not tell you what's going to happen in 2025 outside of clicks, news stories. It's a business. Remember, they're making money, but nobody knows. If they say they have a good idea of what's going to happen next year, run.
I'm obsessed with both statistics and the market, which makes for a very nerdy combination. And I'm often asked by many people what the market's going to do in the near future, the next few months or the next year. My answer every single time goes something like this. I have absolutely no idea, and neither do you, and neither do they. But I can tell you what will happen over many years. The market will go up, and we'll get into how to capture those gains over time. But before that, we have some stuff to talk about here. 18-month life recap. It's impossible to jump into my investing plan without first providing a little context. I'll quickly summarize my investing life up until the point where I decided to blow everything up about 1.5 years ago. I've told this story on the channel a few times, so I'll make it very quick. I was a late bloomer in life. I didn't decide to go to college until I was 23 years old as a freshman. I graduated with a master's degree in accounting at 28 years old, with 0 assets and $75,000 of debt to my name. I found my wife early on at my first real job at Boeing, and we started our investing journey with both of us making $47,000 per year and having a combined $90,000 in debt. We quickly paid down that debt, boosted our 401k contributions, and got our investments compounding in full force. It was easy to stick to our target allocations back then because we always had a surplus of money each month to put into our most beat up positions. Now, we didn't make a ton of money by any stretch of the imagination, but I did practice everything I preach on this channel for many years, to the tune of still driving my 2013 Honda Civic to this day at 42 years old. The second car I've ever purchased in my entire life. We live within our means, make investing a bill, and avoid debt like the plague. Building wealth truly is that simple. I got so passionate about this stuff that I up and quit my job to start this YouTube channel. And it was my bright idea to do this after we just had a second kid and a hefty mortgage payment. And this is a true story, by the way. I'm not retroactively trying to make up a fairy tale here. It hit me like a ton of bricks one day that I had to make the change, and my wife was behind me 100% from day one. I had ramped up my income to $170,000 per year, was fresh off a promotion, and was happy with my job. But I felt a sense of emptiness and future deathbed regrets creeping up on me. We lost well over half of our combined income overnight, and we had to settle into this new life flow. It's a lot more difficult to stick to our target allocations without a surplus of money to invest each month. But I'll end this section like this. It was the best decision I ever made in my life, and I will never look back. Now, let's get to the fun stuff. 2025 investing strategy. There will be 2 primary phases throughout an investing career. Most investors will begin in the accumulation phase, and then they'll transition over to wealth preservation mode. There's usually a 5 to 10 year period that's a bit of a hybrid between the 2 stages. You'll transition from accumulation to preservation within a fairly short time frame. My wife and I are just entering hybrid land in 2025. We hope to retire in 5 to 7 years as a base case, but it could be 3 to 12 years depending on what the market gives us. This is important to note because every video I've made about building wealth over the years is still relevant even if I don't continue to follow that exact path. It is exactly what I did and would still do if I had over a decade remaining before reaching financial freedom. And we're early into this transition, so we're still primarily in the accumulation phase. There's only been one small change to my core portfolio moving into 2025. Let's hop over to my screen to check out the performance of all of our positions in 2024 and to see what our new target allocations will look like moving into 2025 and beyond.
We're starting out here on my favorite site to research stocks and ETFs, Seeking Alpha. If you're interested in trying out Seeking Alpha Premium for free and saving money on your first year if you like what you see, consider using my link in the description below to save yourself money. That's the most important thing, and it helps support the channel. So what I've done is I've pulled up my primary positions in my portfolio. And actually, I think I pulled up basically all of my positions. And I'm recording this on 1/1/2025. This video is being pre-recorded. I think I'll have a portfolio update drop before this. So you're probably seeing this in a couple weeks from now. But I believe this is the full year. So I'm on the 1 year tab. But I also, before I hit this, it shows from 1/2/2024. I manually put in a custom range of 1/1. Of course, the market's closed. 1/1/24 through 12/31/24. And I got the exact same numbers. So I believe these are the year-end figures. We might see a slight adjustment by the time we look back. I don't know exactly how Seeking Alpha updates when the market's closed, like today on New Year's. Happy New Year's, by the way. But what I did was I put my positions in order of how large my holding is in that particular ETF. And I'm just looking at the 1 year. This is 2024's performance. I have lots of other videos where we look way further back. We do some what ifs. We see how I've done against the market over many years and things like that. But in this one, we're specifically doing a year in review for 24 before we look ahead to 2025. You can see the market, VU, had an incredible year at 25.78%. It just keeps blowing up. It feels like every year. But then I want to quickly jump over to JFT&x. So I've been watching JFT&x since inception. It's a little ahead of VU since 5/4/2022. I'm always comparing them, but they stay weirdly close. And this year was no different. 25.78 to the market compared to 25.75 for JFT&x. And I've noticed because when the NASDAQ goes up, it's interesting too, because I don't think it's random. When the NASDAQ QQQM goes up, it outperforms the SP 500, generally speaking. But JFT&x limits its ceiling with those call options, so it doesn't get quite all the ups. And when the NASDAQ 100 index QQQM goes down, it typically drops more than VU. So VU will protect your value because it holds more value holdings. But JFT&x, with that premium income from the call options, protects its floor. So it ironically has a similar floor and ceiling so far in its first 2 years and change as VU. I'm curious to watch that moving forward. But you can see SCHD had a pretty bad year by comparison, an amazing dividend growth year, which I shared in a recent video, but not the best for total return. But hey, 11% on a typical year, we'll take it. This has just been a wild year. VGT did beat the market by quite a bit, about 7%, but my 50-50 mix, which a video is coming, did lose to VU for the first time in 11 years. And then JFT&x, which I've recently dove into from QQQM to protect my floor a little better, and we'll get there when I talk about the target allocations in the Roth IRA, so no tax implications, fell short of QQQM, although since I moved over, I'm ahead by about 3% JFT&x. I'm trying to get good data on floors and ceilings because I know how it works conceptually, but we just don't have a lot of history, so I'm learning as I go. VUG was actually my second best position. It beat VGT, which is pretty rare over the last decade. This is our HSA, and it was up 35%. And then IBIT, which I'm about 3.6% into. Earlier in the year, I sold all my Bitcoin that I had on an online exchange, long-term capital gains, so I made sure to be smart about it. And I put that into IBIT. And it went up almost 100% just this year. It started in January. See, January 11th, you can see instead of the 2nd. So close enough. But it was my best performer by quite a bit. Now for investing in 2025. I finally got there. If that's the only reason you've been watching this video, I apologize for all the blab. I can't help myself. You guys know how I roll. So this is just a snapshot of my most recent portfolio update. And you will have seen a more recent one by the time you're seeing this video. But last time I updated, we were just here, and this is mainly just for the percentages here. So anyway, what I do is I have my individual holdings here, and then I group them up by type here, because these are the allocations that I use for investing decisions. So what I've recently done is I've changed QQQM to JFT&x. And I still consider JFT&x because it is the NASDAQ 100 index. So it groups up along with VGT and VUG in my growth ETF section. It's in that bucket, even though it has the premium income, the lower ceiling and the higher floor. Because we're 5 to 7 years from retirement, I want to get that cash flowing, and it's all in a Roth, so there's no taxes on this. And I want to use the monthly cash flows, especially in a down market when it outperforms QQQM, to reinvest into the mix. We don't have a lot of extra money because yours truly quit their high-paying job, whoops, to make this channel. I mentioned earlier that it used to be easy to adjust real time because we made enough money to manually invest in whatever one was underweight at the time between our big three to keep our goal target allocations of a third each of value, which is all SCHD, growth, which is the ones I mentioned, VGT, now JEPQ, this just happened, and VUG, and then our S&P 500 is VU. And now our investments by default go into the S&P 500, and that's us maxing my wife's 401k. And then they also go into VUG, which is the best investing option in our health equity HSA. So we have contributions going into VUG and VU by default. And then we don't have a lot of extra. I do put $100 a week into my stocks, the HODL factory, that's what I call them. And then there's not a lot of money for other stuff. So these dividends from JEPQ are going to be nice to feather into the target allocations. But inevitably, the S&P 500 will very likely get disproportionately high, which I'm fine with until my wife retires, because most of our investing goes into that by default. So what I really balance on the side is SCHD versus my growth ETFs. And you can see SCHD needs some love, and that's all I've invested in the last couple of years, but it's been hard without the surplus of cash. I'm not one to officially rebalance my portfolio. I might have to start doing that on a yearly basis just because I can't do it naturally anymore. I used to do it by buying to my target allocations. I didn't have to worry about quote unquote rebalancing because we were putting in so much money and I didn't have the big balance over the years. Now this is disproportionately higher than what we're able to invest. I realize that, of course, I'm unprepared. I do these live with you and I just kind of shoot from the hip. I have no script, but I forgot to put in my specific contributions. So I quickly paused the video and did this real time. You can see it's not pretty or anything, but our 401k will have us investing $23,500, and that's maxing our pre-tax to save the 22%. We just hit the 22% tax bracket now. Like we get out of the 12 and just barely into the 22. Our HSA, so we put in 7,300 because Boeing puts in 1,250. Ultimately, we max the family HSA, and then we get a huge company match here too. It's quite ridiculous, actually. This is just our contributions. So we put in 7,300 into VUG, and this goes into VU. Again, that's out of 26 paychecks automatically. The HODL factory gets $100 a week, so I just marked it as $5,200, and that's from my YouTube money, which I netted about 11K over my costs in 2024, just for full transparency. And I'm gonna make a video on about that soon as well. We max 2 Roth IRAs. This comes from our money market, you know, the money the cash we have just sitting there. Cash is in this. Oh, and I forgot to mention, our cash is a little high right now. We like it at 10%, and if it gets below 10%, we replenish cash. If cash gets above 10%, that means the market crashed and we sprinkle it into our allocations to get it back down to 10. But we're still looking for that new car. So this isn't new money. This is just from our checking into our Roth IRAs. We max hers and we max mine. And actually this was unplanned, but it ends up being exactly 50,000. That's kind of cool. Oh, and then I should say we plan to do a Roth conversion every year. And this is moving my traditional IRA over to a Roth. We want to convert it all before my wife retires. So then we have our taxable account and my Roth, because we'll have those 5-year windows coming up to live on tax and penalty free as we begin her Roth conversions when she retires in 5 to 7 years. And this one, it's not set in stone, but we plan to do at least, I gotta fix this real time. We plan to do at least 100,000 a year. Basically what I'll do is I'll convert up to the top of the 22% tax bracket, I believe. And like I said, we just creep into the 22% tax bracket, and it's a pretty big one. So we can do at least 100K, maybe a little more. So this is officially my investing battle plan for 2025. Of course, it's subject to a lot of changes. You know how this stuff goes, but coming into the year, we're going to try to keep these even again. and again, counting JEPQ in the growth category. And I'm okay with that because we're scaling down. We're getting a little more conservative coming into retirement. This is that transition I was talking about. The big Roth conversion will cost us $22,000 of taxes. A car will probably be $30,000. So we'll have to figure out the cash as we go real time. But ultimately, I'd like to settle to 10%. And my goal is to stay a little more true to my target allocations. I need to consider rebalancing, which I don't love doing, but I think it's wise. This was not relevant in our past when we had that cash flow, baby.
That's the game plan. Keep it simple, keep it winning. There isn't a perfect target allocation formula that works for everyone because we all have different goals and risk tolerances. But there are some set in stone rules that you must follow in order for any investing system to work. Timeless strategies for wealth accumulation. I don't care if your system is to hold 100% VTI or if you have 100 hand-picked individual stocks. Never panic sell. Ever. It is easy to, without exaggeration, derail over a decade's worth of consistent investing growth with a couple panic sells. Remember, in the accumulation stage, market crashes actually make you wealthier when you zoom out and look at the big picture, assuming you're dollar cost averaging in. You are gaining more shares per dollar spent during the crash. The opposite is true when you panic sell. In that case, you're giving away more shares per dollar that someone else puts into the market. The market always bounces back. Always. And in the case that it doesn't bounce back, we have much bigger problems to worry about in that world than our investment performance. The next one's a bit obvious, but weirdly overlooked. Invest as much as you reasonably can. Make dollar cost averaging into the market a bill. You know, something like $200 every paycheck automatically goes into the market. You don't even see it. But don't stop there. If you have extra money throughout the month, invest it as well. And I know, I totally get it. It doesn't feel like it makes that big of a difference in the moment. But it genuinely made this dummy a millionaire. I really do mean it when I say I didn't get any huge breaks in life and I never did anything special beyond what I talk about in my videos, just the basics. Compounding math works. It's just deceptively slow at first and then weirdly fast later. And don't buy more stuff just for the sake of buying more stuff. You don't own it, it owns you. Because it owns your most valuable resource, your time. Focus on enjoying the best thing you will ever have in your life for free, your friends and your family. I've said it before and I'll say it again. Money is overrated, but freedom and loved ones are not. Check out one of these two videos if you want to continue down your path towards financial freedom. You got this. Seriously. It's simple and you don't need a professional to help you along the way. You have everything you need to succeed right here, right now. Thanks for watching, and I will see you in the next one. Peace.